Hello traders and welcome to another video review. Today is Friday, February 28, 2025, the end of the week, the end of the month of February as well. Let's find out what's going on the economic calendar for today. Overnight data during the Asian session were quite interesting. Mostly the data were from Japan. Tokyo core CPI, industrial production, retail sales, all of this is quite mixed bag of data. CPI in Tokyo is down from 2.5 to 2.2 and retail sales are up from 3.5 to 3.9. Private sector credit in Australia in line with expectations, 0.5%. German retail sales are scheduled for release at 8 o'clock. Turkish GDP at 8 o'clock as well. Nationwide HPI from UK scheduled for release at 8 o'clock as well. MPC member Ramsey will give a speech at 8 o'clock. And then we got data from the Eurozone. French CPI, French GDP, French non-farm payrolls, retail sales from Switzerland, coffee leading indicators from Switzerland, 9 o'clock. Then some bunch of data from Germany again, unemployment rate, unemployment change. Italian CPI at 11 is scheduled for release at 11 o'clock. And then at 2 o'clock we got the major event of the London session, German CPI data. Then we enter the US session core PCE price index, good trade balance, and personal spending together with the retail inventories. All of this data from the USA are scheduled for it at 2:30. At the same time, we got data from the Canada GDP and annualized GDP. In Canada, the market participants expect a very nice increase from 1% to 1.9%. At 3:45 we got Chicago PMI data from the US. Then at 4:30 we got Atlanta Fed GDP now, and at 7 o'clock we got our US Barker Hughes oil rig count and total rig count, and that's and the US session. So pretty busy day during the London session, during the Asian session, during the US session. So please stay vigilant, stay focused, and now let's just go to the technical section of this analysis. This is a Bitcoin 4-time chart, and the Bitcoin has made a new local low and new swing low at the level of 78,925. All of this happened overnight after a very shallow bounce towards the level of $87,064. We broke below the yesterday's low and we got a new low here. As you can see, the outlook remains bearish on the daily time frame chart. It is even much more visible how it looks like. So the next target apparently is located a little bit lower. Let me just find out the Fibonacci retracement for you guys. The Fibonacci retracement from the bottom, from the top to the bottom, which means that we need to do it the other way around. This is the high, this is the low, and the retracement is now 50%, almost hit. Yes, it's hit. 50% of the Fibonacci retracement of this big swing from the August to the January 2025 has been hit. So it's basically somewhere around $80,000. The next target is 61% of the Fibonacci retracement, located at $63,090, which is very, very close to the level of technical support. As you can see, 71,973. So let me just leave this line on the chart. Right now it looks like maybe I will just try to make it a little bit more. There you go. Now the market is under the bearish control. The bears are pushing the prices lower. They retrace 50%, despite the fact the momentum is way below the level of 30, which is the extremely oversold conditions level on a daily time frame chart. So we are still waiting for another push to the downside. On a weekly, it doesn't actually look good. It looks even worse. It looks ugly. Basically, it looks very, very ugly. So we will see how this weekly candle will close. But as you can see, we come off the extremely overbought conditions. Now we broke below the level of 50. Our size 44 points only. So the market is ready to move way lower. There's room to the downside on the RSI. There's room to the downside on the on the chart. Monthly candle, let me just remove the Fibonacci. Monthly candle looks ugly, very, very ugly candle for bulls, of course, right? Because for bears it's very good candle, right? It's magnificent. It's a very nice situation for the bulls. That for the bears, they like this chart very much. And look at this, we are coming off extremely overbought conditions again. Extremely overbought conditions. There is still room to the downside, plenty of room to the downside. I don't think we will ever get to the point of the 30 here on a monthly time frame chart, because we haven't seen this in years. We haven't seen this. 2000, maybe 2015, but in years we haven't seen the extremely oversold conditions. We might go to the 50, we might go a little bit below 45, and then bounce back up. What I would like to point out on a long-term chart of the Bitcoin is that there is a very strong, very big demand zone located here below these levels, 68,974 and 73,859. So there is still some room to the downside to be covered. Okay, let's switch to the 4-hour chart. That was the Bitcoin. Let's go to the euro dollar. And the euro dollar completed the ABCX correction to the upside. As you can see, we couldn't break above the supply zone. The market reversed, and we are finally below lower time frame, lower trend line, lower channel line, lower yesterday's low 1.04. 52. We broke below 100 periods moving average. We broke below wave X low, so top is confirmed at the level of 1.0401. Now we are going towards the level of 1.0377. Still some room to the downside left, but the market almost hit the extremely oversold conditions, so any movement towards 1.0373 might be considered as final for this cycle, and some pullback should be expected. The level of 1.0450 will now act as the technical resistance, and the level of 1.0402 will act as the technical resistance as well. So right now we are just in this very narrow zone on the euro dollar. Because of the data from Japan, let's take a look at the US dollar versus the Japanese yen. And as you can see, this is better to view on the daily. There you go. The market is building some sort of the base on this recent technical support level 148.66, and it looks like we might see some sort of the bounce to the upside, as you can see on the daily time frame chart. Nevertheless, very close to this level. There is a technical resistance 150.98. there is 100 periods moving average 151.60, and of course the swing high located at 154.81, another technical resistance before we even hit the trend line, the orange trend line. So very interesting situation on our 4-hour time frame chart. The market is trying to break above the level of 50 and stay above this level. For now, nice try of the bulls to move from the extremely overset conditions, like 20 points, towards the 54 points. So good job for the bulls, but not much of the result yet. Just the momentum is increasing. So maybe there is some sort of the accumulation going on here, and we should see some movement to the upside towards the first technical resistance. And last but not least, because we got the data from the precious metals just recently, we need to take a look at the gold prices. The gold moved lower. The gold moved below 100 periods moving average on a 4-hour time frame chart, below the very important local the supply zone, the demand zone and the technical support zone. And we even hit the February 12th low at 2,863, local low 2,856, and this low was made during the extremely oversold conditions. on the 4-hour time frame chart. So some sort of the bounce might be expected. However, on a daily time frame chart, this is just the beginning. The market just hit the level of 51 on the RSI, and we might see deeper pullback here on the gold market. Very nice bearish engulfing pattern, extension to the downside, confirms this point of view. However, we are still trading above 100 periods moving average. 2719 is the 100 periods moving average. There is quite some space here before we will hit it, but there's quite some space on the RSI as well. Right, so please stay focused, stay vigilant. If we won't bounce here where we are right now, when the RSI is on the level of 50, the chances are we are going to go towards 2789, the high of the October, the last day of the October 2024, or then even the level of 725, and then even towards 2719, which is the 100 periods moving average high. So please stay focused, stay vigilant. The gold might be doing just the pullback, and that's definitely doesn't actually look as the trend reversal just yet. We didn't break below the any substantial technical level on the daily time frame chart just yet. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.